Bitcoin has a new buyer. PayPal integrates Ethereum's most popular wallet, and the Ethereum blockchain experiences a few hiccups. We discuss all this and more in today's Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. As always, we'll kick things off with a market update, and just in the past week, we've finally seen inflation get back below 5% over in the US. It's been a little more than 2 years since that's been the case. As a reminder, the target is normally between 2 and 3% inflation. So that's the average prices of how much prices are going up roughly every 12 months based on a basket. And so it's still significantly higher than where it is, but continues to fall. And that's what we've seen in most countries, still at those elevated levels, but trending down ever so slowly. And then we've got Bitcoin, which I'll hand it over to you, Nick, to cover what's been going on in the prices of Bitcoin and ETH recently.
We just saw a slight reduction in the prices there. I think they hit 2-month lows for Bitcoin, and I think Ethereum dipped, below 1.7 thousand. I think as well as hitting around that 6-week low. But we did have quite a big start to the year, so I guess nothing too surprising in this regard. And I'm always interested with the inflation news as well. It's maybe feels almost like it's maybe the new normal of this new era of 4 or 5%. Are we going to be happy with that? I know we've spoken a lot on the pod before, but yeah, really, really keen to see. I know core inflation maybe was a bit higher than the overall metrics if you exclude a few other things, but yeah, other places like the UK still have things are still at about 10%, which is crazy to see.
Yeah, it's hard to imagine. So now, hopefully, it keeps going down, and hopefully a bit faster in some of those other countries like the UK for sure. Now, Nick, is this has to be some of the most bullish news I think I've seen all year. In a bit of a deep bear market where it's been few and far between bullish news. Let's get into this one. So Tether. It's so stable coins, as some of our new listeners might not be aware of. A stable coin is just, hey, I've got $1 and I want to use it on a blockchain. To really dumb it down, I can get a token that is just worth $1, and I can send that on the blockchain, pretty low fees, etc. That's like a really big use case of blockchain technology that's really taken off the past 4 years or so. Tether's probably the one behind the biggest stablecoin, or one of the two biggest, which is USDT. And they have announced their sort of profits, so that they do these quarterly sort of attestations. And it was big news over the weekend where in just 3 months they've managed to allege or claim that they've profited. They've realized a net profit of $1.5 billion US, which would make that, if you were to extrapolate it out to 12 months, which again carries risks. But if you did that, I would struggle to see how it's not the largest crypto company in the world with those sort of figures. It would have to be right up there in the top 3. And it's quite impressive to see it come back, and it's had a bit of a resurgence. So maybe just talk a bit through other sort of details from this one, Nick.
Yeah, the one thing that I took out from this was, I think it was the first time that Tether made their Bitcoin and their gold reserves public. So they come out and said that they've got about almost 2% in Bitcoin. And that equates to about 1.5 billion. So they're also becoming one of the biggest and largest buyers of Bitcoin in terms of the crypto ecosystem. And I think I saw a stat was saying that they were going to be taking over MicroStrategy in the not too future if they continue this rapid acceleration and buying of Bitcoin. Because as we saw, a major reason why I think for Tether to see this resurgence is because they hold a lot of, they back a lot of their reserves in US treasuries. And with the rates increasing, it just meant that Tether's profits have skyrocketed. So for me, this is really important because Tether is the biggest stablecoin in the industry and has had a dicey past, to say the least. A lot of people were unsure whether, Tether was 100% backed. A lot of people were questioning whether they could have potentially encountered an issue if they had to do further redemptions. But I think with the profit we're seeing now, that may put a lot of ease in the market. Because if you're having something to the tune of 1.5 billion, you've got to be terribly mismanaged to really plunder that and not be able to back up your reserves. So positive signs, because I think it's 82 billion now is the market cap of Tether. whereas USDC coin, which is the more regulated US like stablecoin, that has dipped below 30 billion now. So we saw a situation where USDC was going to decrease compared to USDC, but we saw a rebound for that.
Yeah, it's quite a story, and I was trying to do some digging to see, yeah, this Bitcoin accumulation, and from my understanding, all of the 54,000 Bitcoin or whatever it is, which again just happens to be 1.5, valued at about 1.5 billion, which also happened to be their net profit. But those two things aren't really related, just a coincidence. But from what I've been able to gather, they've brought all of that this year, like in this one quarter, like going through the wording of their announcements of how they made more stuff public and going through their alleged assets last in Q4. I was trying to do like the figures and nothing really added up. I suppose what I'm trying to say is there was nothing that gave me an indication that they were holding Bitcoin on their balance sheet prior to that. But I could be wrong. But if you were to then extrapolate that and assume interest rates kind of stay pretty elevated, or bond rates do as well, that they would be sort of accumulating, call it maybe 200,000 BTC roughly, like by the end of the year, which would definitely surpass MicroStrategy as the biggest, the
Mm.
biggest sort of holder. So assuming all of that was acquired in Q1, like that would be extraordinary. Given as well, we got the halving coming up. So when you're talking about new BTC coming in, I think there's about 900 BTC that come into circulation every day. I think every block, it's like 6.25 BTC. So extrapolate that to 12 months, it's about 330 BTC that comes into supply every year. And if you've just got one entity, possibly buying 200,000 in one calendar year, that's just quite remarkable, and it gives me sort of really good, like really encouraged on sort of there to be that extra wave of demand for BTC.
Yeah, I guess the final thing there to touch on with Tether is it's tough because it is an attestation also, which just means that it's not a full audit based on complete access to Tether's books and all their financial metrics. So it is just a third party snapshot, at the financials at a sort of point in time. So if you're looking at this and thinking that Tether has opened its books up and it's 100%, can be trusted 100%. That's one thing maybe to be a bit wary of, that you still don't know the full extent of Tether's balance sheet and Tether the company, but positive nonetheless.
Yeah, definitely. But no, we will move on there to the next one here about MetaMask. So I'll let you take this one, Nick.
Yeah, MetaMask has and PayPal had a announcement, I think, in the last few weeks, in the last few months, talking about rolling out more embedding of PayPal's, services and being able to transfer from PayPal to MetaMask, which is one of the most popular Web3 wallets out there if you want to access crypto dApps. So they've come out and really doubled down and started enabling this for their US users, which will allow them to buy ETH or other crypto more easily with PayPal. And I think it marks the first Web3 wallet to allow US users to do this. So really big steps forward in terms of adoption and creating better user experience for people who maybe want to buy ETH or engage in a lot of these dApps and on-chain activities by the ease of simple click with PayPal. Really builds on what we were seeing in the last couple of weeks. And in our last pod, you weren't there for that, Matt, but we talked about how Stripe has really doubled down into the crypto ecosystem. So positive adoption news that hopefully allows more accessibility for a lot of these crypto services for people who may not be like Web3 native.
Yeah, very encouraging, and just rolling out in the US and hopefully to other countries, sooner or later. I just have one final point. I did forget to mention on that Tether news. One final point. Maybe it doesn't have an answer, but just for listeners and watchers to consider is, again, under that assumption that the Q1 purchases all happened in Q1, so about 54,000 BTC. A bearish take you could spin would be if there's that much demand, like that much BTC was purchased in Q1, it kind of leaves you a bit deflated in terms of there mustn't be that many other buyers out there in the market. So again, it's kind of just a sentiment sort of gauge. And again, just another sort of reminder that there really isn't that much interest whatsoever in crypto at the moment, at least from a retail level.
Yeah, maybe jump into. I think we got some other. I saw some other interesting adoption news. Looking at MicroStrategy, that I saw Michael Saylor, who has been one of the most prominent Bitcoiners out there and very public about turning MicroStrategy into a real Bitcoin focused entity. He had and held, I think, party and a conference looking into their strategy and a lot of the services they're going to be doing with Bitcoin. And so they sort of announced their Bitcoin Lightning platform for companies and did a lot of demonstrations about how traditional companies can work in MicroStrategy's Bitcoin, utility, the new dApps that they're going to bring online, and new services and core infrastructure to allow these businesses to pay with Bitcoin, pay with on Lightning, and really double down on this whole idea of making Bitcoin more of a utility rather than sort of a speculative thing. I'm not sure if you saw the conference, Matt, but it was quite interesting to see some of the clips.
No, I didn't catch that one, but yeah, more adoption for Lightning. I think we talked about that in a recent YouTube video on Collective Shift, about all the different Lightning updates that are coming, and yeah, this is just yet another one, Nick.
Yeah, really keen to see. I think we did for members as well. We can put that in the show notes as well, because that was a big takeaway I had. Was maybe it's getting underappreciated, a lot of the development that's happening with Lightning, and maybe we'll get more into later in the show when we preview Bitcoin Miami. But really keen to see a few big announcements in the next couple of weeks.
Yeah, sure thing. And then with another big sort of development over the past week, came in the form of Ethereum. So, yeah, the Ethereum blockchain, started to run into a few issues, started to circulate on Twitter, like throughout the town hall sort of crypto on Friday, at least Australian time, on Friday morning, I think it was, just about just to do with, yeah, we could get into the technicals, but let's just at a really high level, Ethereum wasn't doing what it normally does or what it's supposed to. So yeah, we could get into a few of the technicals, but that's just basically how it happened. And about 20-30 minutes later, things started to look like all the blocks were processing again, all the blocks were finalizing again, and then maybe about 16-24 hours later, the same sort of issue came back, and it lasted for longer, maybe about around roughly an hour or so. And again, people were then sort of, at least on Twitter, people were sort of worrying like what was happening. Like this hasn't happened to Ethereum in many years, where it's actually suffered some sort of unreliability. And so we've talked a lot about Solana in 2022 number of times with degraded performance, and one or two times I think actually going down. So I think it's only fair that we talk about what's happened with Ethereum in this case. But really, I guess that the high level is nothing fundamentally broke. The chain didn't really stop working or anything, but it was a period of heavily sort of degraded performance. And the issues that are, I guess, a post mortem is still, I think, sort of on its way. I think, at least from what I've seen. I haven't really had much of a look today, but last time I checked.
I think it's
But I'm
I
not
think it's still
sure,
a work
Nick.
in process there.
Yeah.
Um,
Okay. Yeah. Did you have anything else to say on this one, Nick?
yeah, it's an interesting case study at the moment because, as you said, man, not to get too much of the technicals, but the way that it works was that one of these clients, they're called, had an issue, but it meant that because Ethereum had built up a lot of resiliency and had many other backups in place, if one thing goes down, then uh, the chain was continued, to go ahead as planned. And so this would have been a real issue if Ethereum
Mm,
didn't have any of these other um, clients or any other, backups in there to help stabilize the network and continue things ticking along. And that's why it's so important that we talked about Solana. Solana's
mm,
developing an additional client, because if this same thing would have happened to Solana, because they only have the one, it would have meant that the problems would have been very really bad, and a lot worse would have happened. But because Ethereum's been in the market for so long, there's been a lot of infrastructure that's been developed. Once one went down, the rest of the network was able to kind of pick up the slack, for lack of a better word. And so we're able to see Ethereum rebound, and then we'll see what happens in the post-mortem, what happened with this client. But, because of the diversity of the network, everything was able to basically tick along and keep going as planned.
Yeah, that's it. I think Ethereum is really, unique in that sense, that I think there is about 10 clients altogether. I think there's about roughly 5 on the consensus layer side, and then there's roughly 5 on the execution layer side of things. And then I guess the amount of combinations, because you need one of each at this stage still. That amount of combinations is a lot. So as you said, Nick, I think there were some other people who were tweeting that when they had some of those other ones that were still working, they were still saying, "Oh, mine's going okay," which is very, very important. I think when things are going all smoothly, people can start to question how necessary these things are. But it's not until something breaks, like it did, over the last few days. And it's probably another takeaway for me was just how well, I guess the complexity of Ethereum also makes it sort of special in a way that it was pretty impressive to me that it was all of from a user standpoint. So like you and me, if we were using Ethereum during these times, we would not have noticed anything. That was quite that stood out to me, because it's almost like a second layer, if you will. Like on one layer, you've got people who just want to transact, and then you've got that still was going into like blocks being produced and added to the Ethereum blockchain. But it was really an issue about what they call finality, which, again, once these clients all got back, working, these blocks were able to essentially finalize and still have all of the transactions that were being sent, during those times, which to me was pretty impressive. And again, it's something that hasn't happened in a long time. And to think that Ethereum has those systems in place, that when shit does hit the fan, so to speak, it can still continue to function. And even then, I was doing a bit of reading about yeah,
Maybe just there. You know what? Maybe just jump into the next thing then. I don't really have
yeah,
anything else to add.
yeah. Oh, good. Okay. Yeah, and as always on these weekly recaps, we do like to highlight some project news that's been happening, in the past week or so. So I know the Solana, the phone called Saga, that on May the 8th started going on sale to the public, and that sort of ticked off there. So that was encouraging to see. I know MakerDAO, Nick, did you want to take this one?
Yeah, so MakerDAO is one of the oldest DeFi applications out there. They can be considered one of the OGs in the DeFi space, because they're the ones that have pioneered DAI stablecoin, which is one of the most widely used quote unquote decentralized stablecoins that is backed by cryptocurrency. It's backed now by US Treasury. It's backed by a whole raft of different things. So what MakerDAO is in the process of sort of rejigging their game plan and what Maker looks like going forward. So they published a roadmap in what's going to be called like a major update called its Endgame, which is really interesting for me because they actually cited a lot of AI in the roadmap and trying to make DAI more backed by alternative forms of cryptocurrency and moving away from like real world assets, which was really gaining steam in the last couple months and last year. So not sure if you took anything away from that map, but always interesting to see the new narratives taking place and a lot of AI talk, which I was fascinated about and could be a red flag depending on how you look at it. Because I know some people would say that when you're pivoting to maybe the buzzwords of that time, kind of really depends on like if it's really needed, because I think they want to make their DAOs more efficient. So they're touting these new sort of applications that maybe can make the MakerDAO governance more streamlined, because they do have one of the highest expenses in terms of DAOs out there.
Yeah, for sure. We'll see. Yeah, I'm excited to see that. Yeah, how the next few months go for MakerDAO. We'll definitely be keeping everyone posted. You can cover the next project, Nick. One that got a lot of press, I think, last year with the eyeball scans.
Yeah, this is a very interesting one that I don't see talked about as much as it should, because a lot of people don't like this. So what we're talking about here is Worldcoin, which is a cryptocurrency that was backed by some quite reputable people in the traditional technology space, such as Sam Altman, who was from OpenAI, who was behind the Chat GPT, which has gained a lot of notoriety in the space. So this is a cryptocurrency that aims to scan your eyeball and tries to create a cryptocurrency that can be eligible, for everybody on the planet, basically. So the way that it tries to solve the problem of, two people not, uh, getting cryptocurrency that they sort of aren't eligible for, and sort of defrauding the system, that they're going to scan your eyeball and entitle people, every citizen, to a certain amount of cryptocurrency, per person. So it's sort of this new experiment that is going on. It's app launched, and they're still in the process of slowly onboarding people into this, WorldCoin application and scanning a lot of eyeballs. It's gained a lot of hate because, let's face it, this is kind of a scary thing when you think about a company, a group that is scanning everybody and sort of entitling them to cryptocurrency. But it's one that I think is kind of unappreciated in the market in terms of sheer use case, and something that's backed by a lot of technologists.
Yeah, I think one that I saw as well in terms of the next another project as well. Probably I'll add for. Sorry, sorry. I'll just start again. Um, Cool. Yeah, another one for me, Nick, in terms of project updates. I thought I would throw in this one. I saw from the Aave DAO. So Aave, one of the big DeFi sort of projects. They do have nearly 100 million USD equivalent in their treasury. And I noticed there was a proposal to put a a material amount, not a large amount, but single figure percentage of that treasury into both STE, so Lido, as well as RE, so Rocket Pool, which again is why would they do that? Again, for the sort of incentives of earning a higher staking rewards. And this was sort of, yeah, it could be a bit of a canary in the coal mine, or a bit of a pioneer if it gets approved, of seeing how DAOs sort of manage. Well, they are getting better at managing their treasuries, but if they are going to start using, staking protocols or liquid staking protocols and whatnot, it could then even be, sort of another sort of driver of demand for these tokens. So that caught my eye. Nothing's been approved yet; still in discussion phase, but thought I'd give that a mention.
Yeah, I think that's one that we've got on the, maybe we on the collective shift radar. In our new sort of thing that we've launched for members as well, we're keeping track of assets that we really think are mainstays in the market. So Aave is one that I know you're going to be doing a deep dive on soon, Matt.
Yeah, that's it, Nick. Looking forward to it. Speaking of looking forward to, we'll get to our next one on things that we're sort of paying attention to for the week ahead. I know I did just mention Lido there, and that's probably one I'll put under the spotlight for this week. I think May 15th, May 16th, depending on what time zone. It's looking like currently they're going to be upgrading to Lido V2, which we've talked about a lot in member content and YouTube videos. But that's currently being voted on, and if it gets approved, then it'll, I think, automatically trigger that upgrade. So that should be going live, yeah, well, definitely this week, and it's going to be, yeah, really, really great to see. We've talked about sort of the benefits of it all before, but that's one that's finally coming.
Yeah, and the one that I'm looking forward to is Bitcoin Miami. That's happening on May 18 to 20. and it's in Miami, US. So really keen to see the amount of announcements that have come out from this. I'm really expecting some updates in terms of Lightning and a lot of adoption from, I guess, the user perspective, and also core infrastructure that could be potentially unveiled, and maybe some partnerships that could gain some traction. I was really surprised by some of these speakers as well. We saw Robert Kennedy Jr., who's actually a presidential candidate in the US, who looks like you could actually be running with a pro crypto platform. I would love to hear that speech, see what's going on, and see the reception. And we've also got other big names as you're going through here, like Michael Saylor, Arthur Hayes, who's a massive Bitcoiner, Jack Mullers, who is running, CEO of Strike, who is a really big player in gaining Lightning adoption and trying to make the access to people to use it as a form of payment much easier. So really keen to see some of these announcements from a lot of the people who have been in the space. Favorite of mine, David Marcus. So really keen to see the sentiment and some of these announcements that will hopefully come out from this. And I think we're going to have a special episode, hopefully, as part of our next pod to maybe go over the things that caught our eyes if you weren't able to attend.
Yeah, definitely. This is always an exciting time when this rolls around in May every year. So yeah, keen to see what happens. That's a good shout, Nick. We'll move on to sort of ending with a bit of a rapid fire. So, our underappreciated, one thing in the news or a project update that we thought didn't get really that much attention, or vice versa, something that we thought was overhyped or was really largely misinterpreted to the upside by the market. So, Nick, I'll hand over to you to kick us off.
Yeah, thanks. One thing that I thought maybe was underlooked, but could potentially have big impacts into the market is what's going on with Jump Crypto. I saw there was a lawsuit making some waves that looked at how they earned 1.3 billion, quote, manipulating Terra in the lawsuit. So Jump Crypto is one of the biggest market makers in the space. They recently talked about how they might be taking a step back, and they're also really important in the Solana ecosystem as well. So really keen to see what happens here, because it all brings this issue of like information asymmetry into the market. When you have big market makers who are responsible for backing up some of these cryptocurrencies, like Jump was involved with Terra, and they're able to profit quite a lot, on that. I'm potentially wondering if there could be some unintended consequences if, they are found to be maybe dubious or, have some sort of role to play in that. But really keen to see if anything happens because, we've got other sort of things overhanging the market too, like Digital Currency Group. So maybe the gist here is there may be an underappreciation of some of the risks in the market at the moment, with some big players facing a lot of lawsuits. We're seeing Digital Currency Group, who is one of the biggest crypto companies, basically struggling to restructure a lot of their debt obligations with their bankruptcy lending arm of Genesis. So really keen to see what happens. I kind of feel like we're not appreciating it too much, and I think everyone was really excited with the run up to 30K, but some of these underlying pains in the market could be coming to resurface in the coming months.
Yeah, we keen to see this play out for sure in the next week or so. Yeah, I think my one that was probably that definitely was underappreciated. I didn't really see many people talk about this, but I thought it was sort of significant of, guess where crypto is at. Probably going to end it on a bit of a bearish note, at least in my opinion. You can view it two ways, but Goldman Sachs released a family office report. So they surveyed 166 family offices. So family offices have probably been some of the earliest or biggest like sort of investors in like definitely the crypto venture side of things, but they also buy up some cryptocurrencies as well. They did this same report of just surveying them on their sentiment in crypto. Are they going to get involved in the future? 2021 when they did this is what I'm going to be comparing these results to. So they're basically, the takeaway is family offices have become more decisive about cryptocurrencies. So back then, 2021, a lot of them were just like on the sidelines, kind of interested in it, but not really having an opinion. So I'll just quickly go through some here. The proportion that are invested. So in 2021, it was 16%. That has increased 10 percentage points to 26% of those family offices are invested in the crypto space. However, this is probably the bad bit. The proportion that are not invested and not interested for the future has risen. It's gone up a lot, from 39% to 62%. And then those that are potentially interested, so those on the fence, which was pretty popular response back then, it was 45% back then, 2021, and now it's just 12%. So I feel like, yes, it's 166 family offices, but I think it's pretty reflective of where we are. Where I think in 2021 there was a lot of hopium about, the institutions are coming. There's a lot that are still undecided, and they're going to eventually get orange pilled and whatnot. But it appears that hasn't been the case. But things could change, of course, with the performance of markets and whatnot. But I thought that was one that I wanted to throw in there because I didn't really see anyone talk about it.
It's a good point, Matt. Also makes me sort of wonder about what that says about that market sentiment, as you talked about.
Yeah.
Whether maybe that is a sign that a lot of the interest is now very bearish on crypto still, which kind of makes me interested for when prices may accelerate or we see a bit more adoption. Whether that's the switch then you see is when people start to get over euphoric then and all of a sudden make that switch to crypto. But sometimes it does happen at the market tops as well. Interesting case study there.
Yeah, it's an excellent point. Yeah, they are all humans at the end of the day, even if they are family offices. But yes, that is a wrap for this week. If you are looking for more insights, see our revamped Weekly Shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter.